Block shares are up over 25% in the last 6 months, and I last updated this stock as a buy rating on March 15th. So investors are asking me, do I still think Block is a buy even after the share price increase? I'll answer that question in this video after reviewing the company's performance over the near term and longer term, and then I'll update my recommendation after a brief message from my sponsor.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So as I highlighted, Block stock is up over 25% in the previous 6 months. And I last updated this rating on March 18th, I should say. In the introduction, I said March 15th, but I last updated this as a buy on March 18th. So let's review the company again and update this recommendation. So one of the things that Block has done extremely well is in boosting revenue, boosting customer counts, and especially with the Cash App adding millions of new customers. $23.8 billion in revenue was significantly higher than the $1.7 billion it generated in 2016. That's good for a compounded annual growth rate of over 36%. But one thing I have to highlight with Block is you have to put an asterisk on the revenue growth because of the way the company accounts for purchases and sales of cryptocurrencies and Bitcoin on the platform. The way it accounts for it makes it seem like purchases and sales of the cryptocurrency are revenue when it's a little bit murky. So you just put an asterisk around this when you're evaluating Block. You need to look beyond just the revenue growth, and that's why I look at customer count increases. How many new members is it adding on the Cash App? How many new members is it adding across the board to determine more so what's going on with the company? And the profitability numbers become even more important for a company like Block, where you're a little bit uncertain about their revenue performance. And so it's a good thing that the operating profit margin is improving meaningfully. And its operating margin has increased to 5.4% in the most recent trailing 12-month period. That's up from negative 7.2% in 2016. So the company's done an excellent job in boosting profitability. Remember, operating profit margin includes revenue minus all of your operating costs. So these include the cost of goods sold, they include sales and marketing, they include general and administrative expenses, the rent, the lease expense for your headquarters, the staff, the CEO, the management team, etc. It's all included in your operating expenses, which leads to the operating profit margin. So one additional thing to remember is the company, like many tech companies, really focused on profitability in 2022. That's when the central bank in the United States started increasing interest rates to fight inflation, and investors and business owners all feared that a recession was about to happen in the United States, because when the Federal Reserve is increasing interest rates, it's causing economic activity to contract. Because when you go out to buy things like a car or a house, the interest rate on those payments makes a big difference on your monthly payment. And so if the interest rate is higher, the monthly payment is higher, and you're less interested in purchasing those goods you need to finance. And so businesses like Block prepared for a potential recession. They let go of some people, they made some cost cuts, and those moves helped improve profitability meaningfully. You can see that big drawdown from 2021 to 2022, where its improvement stalled and reversed. And then since then, the improvement returned back up to 5.4%. Similarly, the company's returns on invested capital have been improving. The returns on invested capital measures how good a company is at taking investor capital and turning it into products and services. It's important because it also considers how much money the company is putting out and how much profits they're getting back, right? It's more impressive if you have one restaurant location making $100 million in profit compared to if you have two restaurant locations and still making a total of $100 million in profit. For two locations, you need to have put out more capital, more money to build those locations, more for the lease expense, rent expense, labor expense, etc. And so you're investing more capital to have two locations and bring back only 100 million. So the return on invested capital takes into account how much money a business is putting out in comparison to how much profits are coming back, whereas the operating profit margin doesn't include that. The operating profit margin only considers your sales or revenue and subtracts all of your cost that you incurred during the quarter. So these are short-term costs. These are not longer-term costs for fixed capital like machinery or a restaurant location or a warehousing facility. Those go on the balance sheet and then they slowly go into the income statement. That's why I like to consider both the operating margin and the return on invested capital. You get a more holistic view on a company's performance. So lastly, let's look at valuation. Block is trading at a forward price to earnings of 23.76, which is about at the midpoint of where this stock has traded for going all the way back to January of 2023. There were moments when this stock was trading at a more expensive valuation, and there were moments when it was trading at a cheaper valuation. It's right about the midpoint, probably closer towards the lower end of where the valuation has been. Furthermore, a valuation of 24, forward P of 24, for a company like Block that's still growing significantly, adding millions of new clients, new customers to its Cash App and elsewhere in its business, with revenue growing meaningfully, operating margins and ROIC still improving meaningfully, I think a forward PE of 24 is a relatively cheap price to pay for this stock. So I will update my recommendation here and let everyone know that I still think this stock is a buy at current market prices.
Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.